All right, can we get a sound check? Test 1, 2, 3, 4, 5. Don't make me sing. All right, looks like it's working on this end. All right, let's just go ahead and get going here. All right, thank you, James. Appreciate it. Well, Jim, you're a little formal today, huh? All right, I'm just waiting on YouTube to fully catch up. There we go. Look, well, the day is Thursday, May 22nd, 2025. This is the week and charts. Obviously, I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedules to be here, obviously. All right, what are we going to talk about? Well, current market conditions. I'll have a lot to say about that, as I normally do. Your questions on trading, just start typing them in now. I'll be happy to field those as time allows. And towards the end of the show, obviously, I'll catch up. Your favorite stock picks, just let me know if there's something you want me to take a look at. And this week, we're going to continue the methodology in action as we normally do. We got a lot going on. We got a buy signal imminent for the TFM 10% system. I want to touch just very briefly upon the Landry 100, and I want to talk about profiting from a losing trade. And it's going to seem like I might have thrown caution to the wind, and I don't think I did. And call me on it if you think I did, but I think it's pretty cool. And it kind of dovetails in with this week's superpower for a million little things. And I will continue that million little things series. And this week we're going to talk about another superpower, and that'll make a lot of sense in just a few minutes. I hate doing all this intro stuff. I just like to tell you what I'm going to tell you. There's a disclaimer screen. As you know, you can lose money trading or as I'll sum it up, all predictions are about the future. And a lot of stuff can happen between now and then. That's from my buddy Greg Morris. There's all my contact information. Feel free to shoot a screenshot, obviously. You can also reach me at dave@davelandry.com. All right, let's talk about the mystery charts and the methodology in action. This is a recent gold stock that I recommended. You can go to davelandry.com/archives to get these. You can also get the newer ones. I update the archives about once a month. I'll update them after the show or early tomorrow. But if you want them close to live, you can go to youtube.com/Dave Landry. There's a playlist there. I put them up there for private viewing for my international clients so they can translate. So if you're in Portugal or Brazil and you need Portuguese or some other place where you need your native language translated, the translation is pretty good. Just let me know if you're a potential client or client. I'll be happy to put the translation up, put the video there so it can be translated. But I do post it there every day for my international clients. And then I make them live a few days to maybe a week or so later. So the delayed ones show up fairly quickly there. Anyway, TFPM, recent service. And this was a prior mystery chart. So it was a bit of a downtrend way back when. You can see the Landry light was to the downside. The highs were less than the moving average. And then it began to rally nicely. Nice gradual uptrend. And notice that the Landry light was all green during that rally. Then it begins to accelerate higher. And then it pulls back to the EMA. When it touches the EMA or any other moving average you might be using with Landry light, the Landry light goes back to zero. It just counts the number of bars that the lows are greater than the moving average. And the Landry light goes from whatever the count is back down to zero when it touches the moving average. So +1 for every bar above, -1 for every bar below, and 0 if the bar touches the moving average. Pretty simple stuff there. I know I've kind of beat the dead horse on it before. So that was the setup, and it was first recommended on 4/29/25. And we'll take a look at that. Entries here, stop is here, initial profit target way up here. Let's see what happened. Yay, it's kind of off the races. It came back in. And now it's trying to claw its way back a little bit. Not so much today, though. But it is what it is. Let's just see how it shakes out longer term. As I often preach, a lot of people get bored a week or two into a trade or a day or two into a trade thinking that it should only move in their favor, and they bail out too soon. Yeah, you're going to have some losses like this, but longer term, if you quit too soon, you'll never catch winners. And you might get lucky every now and then catch one, but for the most part, you won't. Without those big winners, you're never going to do well longer term. So this one was not a mystery chart simply because it triggered before I was able to show it in the weekend chart. So 99% so far, at least, of these mystery charts come straight from my trading service as official recommendations. Anyway, this one made a bit of a minor double top, and then it sold off fairly hard. And before it did that, it had nice acceleration, just like the TFPM. And then it sold off fairly hard. So I listed it as a Landry light pullback, also kind of a TKO or double top TKO. That's DTKO. Double top TKO, you have two tops separated or two highs surrounded by lower highs, two pivot points, if you want to call them that, roughly around the same area. I like when the right one overshoots the left one a little bit like this, by the way. So make a note of that. Those are the best because a lot of people get trapped in the market who comes back in. They're like, that was a fake out. The shorts start piling on, and the longs, the nervous Nellies, those people who get in late in the game, those longs tend to be the first to bail out. And a nice little knockout move knocks out those players, sucks in some shorts, or sucks in more shorts, I should say. And if the market reverses, a lot of times you can take advantage of the predicament of those players. As I preach ad nauseum, my version of technical analysis is simply reading the psychology of the previous players. We don't know the psychology of the future players, obviously. But if we read the psychology of the previous players through a little bit of experience of chart reading, and it doesn't take a tremendous amount. Once you have a few patterns to recognize, or just one pattern, like the Landry light pullbacks, as I preach, as Linda says, Linda Rasky, all you need is one pattern to be successful. And there's very simple things that you could do with this one pattern. You could look for, or I should say, let me rewind that. The secret for that one pattern is to find the best of those one patterns. And you want persistency and acceleration and all the other trend qualifiers I talk about. And ideally, in some cases, you might have like a bigger picture pattern working for you, like a little bit of a double top happening here, which is a little counterintuitive, but a minor double top like this can actually be bullish, as I just explained. Anyway, entry was here, stop is down here, initial profit target is up here. Not a whole lot to report on that one just yet, but trade ain't over yet, right? All right, I want to talk a little bit about using discretion and profiting from a bad trade. And what happened here sort of dovetails into this week's presentation on a million little things. And the reason is because I was kind of in oh shit mode, bit of a panic mode. And then I took a deep breath, which is from a neurological standpoint, very important to do, to get past that fear part of your brain, the lizard brain hidden way down in there, your amygdala, and then all of the flags that it alerts off, or how you want to look at that, all the problems associated with that primal lizard brain, and get to the part that's sitting on top and make a conscious decision. Oh, every week I claim I'm going to bring my brain out here. I have a brain. It's in the closet right now, but I can take it apart and show you what's happening. We'll have to do that next week. Anyway, if you take a look at the service on 5/5/25, now this is published on 5/4, and again, you can get these later ones on YouTube, youtube.com/Dave Landry, he tried to say, or of course you can subscribe to the service and get them live. Little soft sell there. But anyway, at 5/25, you can see Yale was listed. And see TFPM's right here. Some other golds were listed on that day. AEM, and what else is the gold in here? I think that was it. Oh, VGZ was another one. And notice this one checked off here. That's a potential short. If you had a lot of time, go in and see how the Landry list does, and then see how my official recommendations do, and see my reasoning before the trade, okay? And that'll have zero hindsight. Now, the archives are out there, warts and all. You're going to see a lot of ugliness out there, but every now and then you'll see one really take off. Anyway, here's the Yayla. I decided that the risk wasn't worthwhile for making an official recommendation just because it seemed kind of super speculative. And not that most of what I do isn't super speculative, but I figured it just wasn't worth it at the time. But the more I looked at it, I decided to take it on my own. By the way, if you go back and look at this Landry list, this is pretty much my call list going into the next day. Yeah, I might take some trades that are outside of this that are super, super, super crazy that I didn't show, but for the most part, this is my homework, and this is me publishing my actual homework. And my goal is to make money off of my homework. And if I could throw off some of this research, kind of excess research, so to speak, then others can hopefully profit from it too. Anyway, nice uptrend, nice little pullback. It's probably also a Landry-like pullback. I didn't have time to put the chart in with that. And again, that's that one pattern for the most part. And as I said 1,000 times, I forget how long ago it was, but it was a period of time where we had a pretty good run. So it wasn't earlier this year when the market sort of tanked, obviously, except we did get some shorts then. But anyway, going back a year or so ago, I remember looking at the recent string of winners, and every one of them was a Landry-like pullback or darn near close. And I did a meta stock presentation on that not that long ago too. So that's going to be, you have to search YouTube for that. I should have liked it on my channel, and I think you can connect to it from there. But if you need this presentation, let me know. Just, you can Google Metastock Dave Landry and you can find those. Anyway, so that's where I bought, and it was working fairly well for a few days, right? About a week or so. And then I come in on the 20th, 2 days ago, and I'm like, shiitake mushrooms. I see this thing just trading way down there, getting absolutely creamed in pre-market, and I freaked out a little bit, truth be told, because I did take this trade across multiple accounts. I usually take most of these trades across multiple accounts. And then I took a deep breath, okay, stopped dropping F-bombs, took a deep breath. I took a look at the daily chart, and I said, hang on a second, this looks like an opening gap reversal. Now, ideally with an opening gap reversal, you want to trade in the direction of the trend, and ideally during a pullback. So like you'd have a pullback like this, and imagine this bar over here was down here. That would be the ultimate opening gap reversal. But I said, you know what, this actually looks pretty good as an opening gap reversal, and it actually did come up in my opening gap reversal scans when the market opened. And I noticed that it, from the pre-market levels, which is something I never really talked about using, but in a case like this, it might be worthwhile. It was getting annihilated in pre-market. It just kept absolutely imploding. But it opened almost at its low and then started gapping up. This was actually much higher than it was in pre-market. So this was almost a gap from how low it was in pre-market. That's why I use the word gapping up. And then the next few bars were nearly gaps too. So I decided, to, you know what? If I was seeing this for the first time, I think I would take it as a trade. And that's kind of a good litmus test. So it does kind of seem like, well, Dave, you're averaging down. It's like, no. I'm looking to take a day trade out. I already have a loss, and I should say losses in the thousands and thousands of dollars. And I am looking to bail out and sort of take my lumps. It was like, well, hang on a second. If you were just seeing this for the first time, again, this could be actual opportunity. So this is kind of a dangerous thing to do, and I realize that. So this is a little bit more advanced technique. And as long as you could fully justify it and live with your justification, which we're going to get to when we get to the million little things, then by all means, take it, okay? So I bought 1,000 at the market, and then I flipped out 500, and I made 320 at first loaf, and then I flipped out 500 near the close. In fact, looking at the trade, looks like it was a few minutes after the close, so I must have been settling everything else, and then to settle this one, I ran out of time. I had to settle it in after hours trading. And I guess the reason it took me 3 minutes and 45 seconds, if that is correct, forget if that's on the, no, that's on the right time. That's on Central Time. So I must have used a limit order, and I think if memory serves, I kept dropping that limit order until it finally got filled. So I got filled at 740, closed at 744. So yeah, it filled close to the close. That's closing price. That's pretty good. Anyway, so that worked out nicely. Still long the original 1,000 shares, and it's kind of hanging in there, but nothing to write home about just yet. All right, a quick update on the TFM 10% system. I'm not going to bore you with all the rules. Just know that the buy side, you need 2 bars of Landry light, lows greater than 50 simple moving average, and you have to be within 10% of the 50-week closing high. So either in that light pink zone or the green zone would mean you're above that 10% line, which is the hot pink zone down below. That's the danger zone. Anyway, bar 1, bar 2, and we'll zoom this in and take a look. So again, 1 bar above that 50-week simple, 2 bars above that 50-week simple. Now this is a buy on a V-shaped recovery. I'm not crazy about that, but the reason that I probably won't take this signal in and of itself, at least just yet, and this could trigger tomorrow, is because the market has headed lower. So if we keep heading lower, we're bouncing a little today, I'm going to be less inclined to take it. Now, keep in mind, I don't follow this mechanically. I did take a signal a while back. But Dave, you took a signal a while back. I did. And I wrote it out for a long, long time in the queues. And I followed the system mechanically once I got in. But I have done some research on this. I haven't quantified it just yet. But from what I've seen empirically, it looks like when you buy on weakness, it's not a good thing. So if you know my core methodology, which is mostly pullbacks, and go back and look at all those mystery charts that I talk about, you'll see that I'm buying on strength and not weakness, okay? And then one thing that's shocking, even on an intraday basis, which I do way more than I should, but I'll scale back. But even on the intraday basis, if I'm hot and heavy and want to go, I almost said something stupid. But anyway, if I'm excited to get into a market because it's rallying, I'll put in a market order. I'm sorry, instead of a market order, I'll put in a stop order above the market. And I'm shocked at how many times it doesn't get triggered. Now, bringing that back to the core methodology with a pullback, having that entry above the market, let's say the market closes here and you got some wiggle room and your entry's here. I'm shocked at how many times the market will rally, stock being a stock, and then roll over without hitting that entry and no capital gets put into harm's way. And as I've said 10,000 times, there's been many a times where people 6 months from now say, well, Dave, what should I do with that turd you recommended? And I'm like, I would never recommend that stock. It's going down for the last 6 months. And then I'll go all the way back into the service archives. I'm like, yeah, I did recommend it 6 months ago, but it never triggered. So waiting for that trigger can keep you out of a lot of trouble. So just real briefly, speculation is still alive and well, even through this bear move. And you can see there's some very significant gains in here. And most of these, that's just going back a few months. The Landry 100, just by the way, all I'm doing is buying brand new 50-week closing highs, okay? So in the case here, this would be a 50-week closing high. Now, I'm not a breakout trader, except a little bit in crypto, and we'll get to that in just 1 second. However, I think if you were to play breakouts, you would have to play enough of them to where you're capturing enough of them, and you'd also have to probably be a little liberal in your stops. And in this particular methodology here that I'm following, it's super simple. I can give you the formula. It's you're looking for 100% of the 50-week closing high, and then ideally you want to pick stocks with a little bit more volatility in them. There are some SPOCs in here that I put in for S&Gs because this is not real money. This is kind of an ongoing experiment and proof of concept that momentum works and trend following works. There's also some nuances which I'll skim over just here. Not skim over, just cover briefly in 1 second. But anyway, so these are all bought at new highs. The point I'm trying to get to is, and I think Jeff here knows a little bit more about statistics than I do. In fact, I know he does. And he seems to think that you don't really need 100, but I'm not sure how you can prove that statistically since the markets aren't normally distributed. And that means that the markets don't normally adhere to statistics. So if there was a much smaller number, then that would be kind of fun. If it was 10, then maybe you could do that as a private trader. But for now, I'm continuing to keep this a pure 100 momentum list. And this one you can see took off really nicely. And the other thing that the Landry 100 does is it's kind of a feeder list. I still look at all 2000 charts every day. I still have another momentum list that I make from that list, okay? The momentum list is old Landry list and things that could set up soon. And then the Landry 100 also helps me to find the winning stocks. And it's a little bit of an egotistical kind of fun thing. Like I want to be in these rip-roaring stocks that go straight up and make sure they're on in number 2 or number 1, whatever. I just want to make sure they're on my radar. And that's going to help me because they could subsequently set up and they might be worth trading. Just real quick, as I say each week, momentum does it badly. One of the nuances that I learned about with this momentum list, and I need to work on my tracking. And like I said many times before, the tracking software that I had is no longer available. And this list would get absolutely annihilated. So now I just can go through the charts and see, just kind of say, okay, well, I know it got whacked today. And what was kind of cool is even though if the market's kind of making new highs, kind of gradually making new highs, kind of slowly doing this or whatever, losing a little steam, this thing would get whacked. And sometimes the market would still make new highs, but on a less impressive basis. And then within 2 or 3 days, the overall market just gets absolutely creamed. So it's like that momentum ends badly and it usually gets hit first. So there's so many things that I've learned from this and continue to learn, and it kind of reaffirms what I'm doing from a trend following momentum standpoint. You got to be careful with the relative strength, and I've talked a lot about this. Relative strength trading just means that you're buying the strongest, and that's what I'm doing with this list. But recently it was a bunch of grocery stores and super defensive stocks that I had in there. And then the market did 2 things. One, it sold off more, and eventually those stocks sold off, okay, and I took them out. And then the second thing it did was a little perverse. The market begins to rally, and sometimes those stronger stocks can actually become a source of funds, especially if they're defensive issues that were just put into these, I guess, institutional portfolios because they were defensive issues. So I don't know, but there's definitely something there. It's still a fantastic way to see the money flows, like all those golds in there, although I took quite a few out recently. But now I'm finding myself probably going to be putting some back in now that gold did a little correction and it's beginning to take off again. And as I often preach, cash is not trash and it's treated as an asset class. So a while back when the market was tanking, I don't put shorts in here because it's a momentum, upside momentum list. But when the market was tanking, I might have been down to 80 or 75, I forget the number, what the number would be. But what I'm doing is I'm kicking out losers out of the Landry list, and in its slot, I'm not replacing those. So that becomes a slot for cash. So cash is an asset class. Okay, any questions on all that? As I've said ad nauseum, I had an epiphany probably a year and a half, 2 years ago. And I realized that trading isn't a big epiphany. My epiphany was that it isn't a big epiphany. You'll get some epiphanies here and there, and you should, okay, especially if you're doing your homework every day and working hard at it and not grail hunting too much or at all. But the bottom line is it's really a million little things. everyone thinks that they're going to it's just going to click one day, and then you're going to get it. And maybe it will click for you. Maybe you'll say, okay, well, I'm just going to trade Landry Light pullbacks. I'm going to use the money management system. It doesn't have to be my stuff. It can be somebody else's. But since I know mine the best, I could talk about it. And you're just going to follow the plan, and you're going to work really hard to figure out the best setups, how to pick the best setups, momentum, acceleration, persistency, all these things that I preach earlier and preach throughout. Anyway, but the reality is it's a million little things. And boy, since I started the series, this is one of the best things I've ever done from a personal level, from a selfish standpoint. And I think if it's important to me, because I'm down here in the trenches, I think it's important to anyone else who's out there putting capital into harm's way to realize how many little things, like, I'll give you an example. This one worked out, thank God. I didn't get rich off of it, but I pulled like $100 or whatever out the market. It could have been really ugly given the volatility of the market. But I had a few hundred shares of XL, maybe a little bit more than a few hundred, left over that I've forgotten about in an additional account. That's one negative thing or negative aspect of trading more than one account. But people are like, why do you have more than one account? It's like, well, you might have, there's an IRA account, which is, what do you call that, qualified money. Then there's non-qualified money accounts. And just over the years, things happen to where you end up with more than one account. Anyway, so the superpower for this week that I woke up thinking about last Monday was be flippant. And I've heard that term twice in my life. Once it was from a professor when I was working on my MBA, and I later became friends with him. But the second time I heard it, it stuck. It's kind of a stupid story, but my wife had a couple of her clients, and she's like, why don't we take them sailing? It's like, okay. And so I could be a bit of a captain, what's his name? Captain Bligh, whatever, on a boat, especially when the shit hits the fan. Sailing is hours of boredom interrupted by brief moments of sheer panic. So we had a really good, nice day out on the lake sailing in a small boat. And so we decided, well, let's go ahead in and just sail around a little bit. We weren't ready to go home. So we started sailing around the canals and behind people's homes. And we got to the end of this one canal, and I started the motor, or tried to start the motor, I should say. The motor wouldn't start. And long story endless, it's like, so, well, we could tack 1,000 times and just sail right back up the bayou. And the guy that was with us was like, okay, let's do that, whatever that is. And so I started screaming at him to get he was a bodybuilder, he was a big guy, but I was questioning his manlyhood because he couldn't turn the winch. And anyway, we was tagging like slam and hollering and screaming at each other and tacking back and forth, back and forth, back and forth. It's a random story. Anyway, long story, some guy comes running out as we tacked away from his dock about a foot away from hitting it, because the bayou was so small, or canal was so small, you had to really use the entire canal. I don't think he had a shirt on. It was in Slidell, Louisiana. Shirts are optional over there, I think, for the men at least. And he said, you can't be doing those kind of maneuvers in the canal. And I said, well, the motor's got bad gas. Give us some fresh gas or fix our motor. And he goes, you don't have to get flippant with me. Well, that was a long run for a short slide. I realize that. But the words flippant stuck with me after that. And I think being flippant can really be a superpower when it comes to trading. And that's why I chose the word flippant, if anybody cares. The other thing I thought about last Monday was the best way to describe being flippant as a trader would be to channel Larry Williams. Larry Williams, super nice guy. I met him in person, was it a couple years ago at Stock Charts ChartCon, super guy. Anyway, to make money as a trader, you have to not care. As soon as you start caring, you have emotional attachment. It's counterintuitive. The more you care, the less you make. The more you're clinically dispassionate, okay? That's a very important phrase, clinically dispassionate. That means let's say you're a doctor, and this really applies to psychology, but let's say you start getting some sort of emotionally attached to your client's problems, okay? Well, you're no longer the person who's seeing things clearly. You're seeing them from more an emotional standpoint, and you could actually do more harm than good when that happens. So that's the word clinically dispassionate. And I'm sure it applies to other forms of medicine too, but that's the thing that comes to mind. The more you're clinically dispassionate and less attached to your trades, the more you make. It's really quite simple, but very hard to accept. I like the way he ends that with that. easier said than done. Anyway, the negative capability comes to mind from John Keats, and I've done probably complete presentations just on this alone, but it's the ability to embrace uncertainty, mystery, and doubt without a strong desire to grasp for concrete facts or reason. Well, what's one of my favorite sayings, okay? Don't confuse the issue with facts. And you have to be willing to, like Mr. Keats said, just kind of go with the flow and realize that anything can happen. Now, in more modern day, I haven't read this book, but it came to mind. This is one of those, I guess, millennial type of books, for lack of a better word. And I did an AI overview on it just to kind of see if it would dovetail into what I'm talking about. It looks like it does. Notice that accept negativity and problems. And there's probably other good things in here too. Prioritize what matters. Okay. Don't swing at every trade that comes along. Make sure you're taking the best, leaving the rest, obviously. But accept the negativity and problems that you're going to have. And there's a lot of problems in this business. It's really problem management if you think about it. Take responsibility, question beliefs. So all of this stuff sounds pretty darn good. And it makes a lot of sense when it comes to negative capability, being clinically dispassionate, and so on and so forth. Anyway, so here was a kind of a so what, flip it trade I took. And this was a buy at B second setup. And I'll walk you through that in just one second. But I just want to show you, this was the post that I put up on Facebook a while back. So this one had 1, 2, 3, 4, after 5 bars of trading, okay? So the buy B pattern, technically, you're buying new closing highs. And this is one of my only breakout patterns that I actually have. It's with IPOs. So technically, that bar 5 was right at a new closing high. But I have the day 1 rule, which I've discussed quite a bit before. If the high is set on the first day of the week, and you won't know that till day 5, near the close, right? Then the market must also close above the day 1 high. That's the only rule. Otherwise, let's say that this close was up here somewhere, or this bar here was bar 5, that would have been the buy. I didn't take it. It was less than $5 a trade. That is a general rule. Not that I'll never take an IPO that's less than $5, but I found through a lot of empirical research that it tends to work better if you have stocks that are more than $5 a share. And originally it was less than 20, and now I've bumped that up to 30. So more than 5, less than 30. General rule for the pattern. Now I do have some patterns that I use for higher price IPOs, and I also will trade pullbacks, first pullbacks especially, and other patterns in IPOs. But this is the buy at B pattern. And I pointed out that it was going to trigger another buy at B, or a retrigger, so to speak. And the more I thought about it, it's like, okay, what if I took 1,000 shares, okay? And so what, right? Because here's my thinking. If I put this stock out on in my Facebook group, and I come in on Monday and this thing is skyrocketing, I'm going to be pissed off, okay? And the flip side of that, and I'm kind of, spoiler alert, this is kind of what I'm getting to. Flip side of that is like, if I don't think it's worth it, I'm not going to do it. But for 1,000 shares, I'm like, what the heck? Who cares? And then I come in, and this is one of those million little things. And I noticed this one was on my quote screen, and it was the biggest gain in my quote screen. I'm like, well, hang on. I think I'm long that stock. TGen sounds like a biotech. It's like, oh. So I quickly looked, and sure enough, I was long 1,000 shares. And I went ahead and took the profits. It actually, had I been paying attention, I could have put in a trailing stop and made a lot more than $319, but I was happy with that because it was already on the way back down by the time I realized what was happening. So I'm not holier than thou, a million little things right, and I really need to keep a notebook of the million little things that I personally need to make sure I'm doing. One would be, like I said earlier, check to make sure any day trades have been closed out on all accounts so I don't wake up with a position left over from the day before. And number two, check all my other positions early on. But anyway, I decided that as it started coming back in the following day, that it wasn't worth letting it go too far negative. So I decided to just cash out and be done with the trade. And I figured this was just kind of an S&G type of trade to begin with. I was kind of flipping with it. It's like, well, I don't want it to lose much money. I really didn't want it to go back below where I got in, but I gave it a little bit of wiggle room and then bailed out and ended up with $200 in 2 days, which is better than the put. You know, I annualize that. It's not bad. What's that? $25,000 extra? I know. Fuzzy math. Anyway, as I said a while back, you know, one thing I recommend is kind of like do a little time travel. And you don't have a crystal ball to look forward, and you can't time travel. So how can you develop these type of superpowers? Well, what you want to do is what I call part of the pre-mortem. Okay, post-mortem, you want to look back and make sure you did the right thing to begin with, right? And I'll get to that in 1 second. But the pre-mortem is more of, okay, if I take this trade, what's going to happen? It's kind of like all that mental, and it's improper to say, but you get the idea that back and forth that I did going into it, it's like, okay, I accepted the outcome. And that's the secret, is make a decision and accept the outcome. And I'll get to that in 1 second too, I promise. Anyway, so let's say you're looking at a trade looks like this. This looks like a pretty good pullback, right? Kind of looks a lot like that Yale trade from earlier. Almost exactly alike. So the entry was there, stop was down here. It triggers, and then it fails miserably. Now, keep in mind, you're kind of imagining this in your head. It hasn't actually happened yet, okay? So this is your visualization. So if you could say, F, this one should have worked, but shit happens, okay? Next. Now, if that happens on every trade, obviously you're doing something wrong. But if that doesn't happen that often, or if it does happen somewhat often, and overall conditions have really changed drastically shorter term, then chalk it up to shit happens. Now, the other thing that happens, and believe me, this happens more than I care to admit, not as much as it used to, but it still happens, where you have that F. I knew I should not have taken that trade. And the point I'm making there is we are all guilty. We take a trade, and when it doesn't work, all of a sudden we really become good analysts, right? We go back and we look at that chart and say, oh, it was kind of wide and loose, and the sector wasn't trending, and you know, the overall market wasn't that great. All of a sudden, you're a really good analyst. Well, everything you just said is true, but it was true back then, obviously, and it's certainly true now. So that's where you need to go in and kind of imagine how the trade's going to work out. So getting back to the trade I mentioned earlier with the IPO, where I was being flippant, I'm like, okay, if this thing fails miserably, what's the worst could happen? Well, it was $4 or whatever it was, IPO. And if it fails miserably, I'm out $4,000. Can I live with myself? Yeah, it would suck, okay? But I could live with myself if that happened. And a much better scenario is like maybe lose $400 or $500 max, probably half a point stop or whatever would have been fine with that. So that's the best case loss scenario, best losing scenario, and then the worst case scenario is it goes to zero. All right, I can live with that. I think it's worth taking. Now, let's visualize the same trade if it takes off, and that's the FOMO aspect, and you have to be careful with FOMO. But if it's a trade you're thinking about that's legit and it's a legitimate setup and not just FOMO, I'll give you an example of FOMO. I'll admit guilt. I went in, took a break, had lunch, visited with my wife or whatever the case may be. And yesterday I come in the market and the market crashed while I was in there. And I found myself putting on some inverse ETFs or maybe I shorted futures too. I did short futures too. And it's like, well, hang on, after all was said and done, I realized I was kind of caught up in something that already happened. So that's like a true FOMO situation from a negative standpoint. But if you're feeling FOMO and you have a legitimate setup, then by all means be flippant and just take that setup and trade it and flip it away. So again, there's our setup. And imagine that this time it works really well. Now, let's say you made the decision for whatever reason and said, the setup looked okay, but I'm okay. I can walk away and be okay because, again, maybe it was a little wide and loose. Maybe the market wasn't there. Maybe the sector wasn't there. And a host of other reasons that are fairly obvious. So what? You can't kiss all the women unless you're Harvey Weinstein or Epstein or who else? Bill Cosby, and you got a lot of roofies. Anyway, the other outcome would be F. I knew I should have taken that trade, okay? So you need to visualize these outcomes and go back to the setup and decide whether or not you're going to take it, because one or two of these things are going to happen usually, and then maybe just chop sideways forever, and that's a different scenario to deal with. You have to deal with the boredom of sitting in a trade that's not moving as long as you're not stopped out. So a while back, I put this in a presentation, and trading is a lot like life. You have to make decisions, and more importantly, you have to live with them, as I joked before. And I got approval once to say this, not every time I say it though. Make a decision to marry the most beautiful woman I ever met was a pretty damn easy decision. Living with her is not. But that's another story. No, I love you, babe. In case you're watching or listening. My walls were, I tried to insulate my walls, but evidently I didn't do enough research. I put rock wall in them. I did some of it personally, and then the builder took over. And it didn't work. It had a reverse effect. It amplifies what I'm doing in here into the house. But the house, my office is separate from the house, but it shares a wall with the house. When I first moved in, we didn't have a fence. All my trading screens are against the wall over here. And I let out an F bomb. I went, F. And then outside in the yard, a kid hollers back, So I thought that was kind of funny. Anyway, make decisions, live with them. And if you can't live with the decision, if you're feeling any animosity on a failed trade, look, you're going to have F-bombs, okay? That goes without saying. That's why I insulated the walls for that and when I'm trading poorly. But you should be able to live with that decision and say next, like I said earlier. So the secret then would be just make better decisions. I know it's easier said than done, but it can be done, okay? All right, any questions on all that? Let's shift gears and hop into crypto. Let me get my screen shared here. Okay, so we take a look at Bitcoin. And Bitcoin has had nice Landry light for a long, long time. It's also had upside proper order, okay? Uptrend proper order, I should say. So let me just pull it up in background here and show you that. I think it's a little easier to recognize with the illustrator on the bottom. Oops, that's the P's. Let's take a look at the Bitcoin. Talk amongst yourselves while I fumble this keyboard. BTC, USD. Okay. So anyway, here's your upside Landry light. When you have downside Landry light, that means the highs are less than the moving average. In this case, I used the 30 simple. I'm sorry, 30 exponential. And then upside Landry light is a positive. And this just counts the number of bars you are above that moving average. So nice upside Landry light, 32 bars. It's been 32 days since Bitcoin has touched the 30 EMA. 30-30. Maybe that's, hey, somebody do some research on that, okay? That might be kind of interesting. So 30 days of upside Landry light. And then if we take a look at proper order, and this is by plugin in ACP. It's free now. I think I will eventually charge for it. So you might want to grab it while it's still free. And that way, a year from now, somebody complains, you said it was free. Like, well, I gave you an extra year. Anyway, you can see that lo and behold, you have upside proper order, uptrend proper order, I should say, which is 10 simple greater than 20 exponential, which is also greater than the 30 exponential. Okay. So 10's above the 20 and the 20's above the 30. That's all that is. Now, more importantly, we are above all of this resistance. We got through all this resistance in here. Now, as I was talking or saying to my peeps earlier, I think what happened, and this was backed by a little bit of evidence based on people on X pointing out the selling in Bitcoin, because you could actually see the ledger, right? And it seems like a lot of people who were longer term holders were dumping. And more importantly, these were early adopters, okay? These were people that bought it way back here. I remember when I bought it at 18,000. I thought I was the biggest stupid idiot in stupid idiot town. I'm like, boy, am I nuts buying something that's made up out of thin air and paying $18,000 for it. But looks like that was a good buy, right? It was the funny meme this morning was that little what was that show? I've never seen the whole thing. I had to turn it off. The Avengers or something, where they had they used like little puppets, and it was the guys who did South Park, I think, created it. And I put it on during lunch at my old house. I came into the house for lunch, and I just had it on, and some repairman comes in the house, and there was a scene I was not aware of where the two puppets were having sex, and a very gross type of sex. And so I'm like microwaving my food or whatever, and the guy's, walks out from working on the air conditioner or whatever, and he starts talking to me about what I owe him. And there's these puppets doing these things to each other, and he's probably thinking that this guy's into puppet porn. But anyway, I digressed on how did I get into that? Anyway, Bitcoin all-time highs here. What was the story there? It'll come back to me. As I've said before, sometimes you could just buy these things as they're making new highs. In this case, I bought this one. This was on a pullback. The entry was here. Almost got to the IPT, not quite. In Bitcoin, I'm sorry, in crypto, I'm just using 20% as the initial profit target. I'm taking off half of the shares. Where's I going with that puppet porn story? Anyway, we got some outtakes in here today. Anyway, that's one that I bought out of a pullback. Now, sometimes you can just buy them when they're making new highs. When you want to take a look at Bitcoin first, right? Because that's going to be your bellwether, obviously. And then, again, because, as I've said before, I should say, the altcoins can be a wildly inefficient type of market, okay? I mean, look at this, 30% just today. So obviously that's a very inefficient market. The S&P 500 is not going to move up 30% in one day. Bonds are not going to go up 30% in one day, right? Very efficient markets. But a little IPO might, okay, like we showed earlier, that was what TGen or whatever, took off 30, 40% in one day. It could happen. So in an inefficient market like this, when they're all moving, like maybe now, you can go in, like the ZEC is kind of interesting. You can go and buy the ones that are making new highs. Don't bet the form, okay? But this will actually work as opposed like the Landry 100 with stocks. I don't think you could just pick and choose a few brand new stocks that are making brand new highs and go with them. I think you would need a sizable portfolio. Whether 100 is overkill, I don't know. But again, sometimes you can just go near like the ZEC, kind of looking interesting. Looks like it could be a little thin. And just go through these. And again, if they're making brand new highs, it might be worth a shot. And we're talking very small. You're not investing a lot of money in these. You're just taking it as a very small shot. And this is actually like fart coin. You know, if you put more than a little money in the fart coin, you're stupid. Okay. But if it's going up, you might be able to make a little trade there. Okay. These meme coins, I'm less enthused about them than I used to be. I guess now that I realize they're just completely made up. It's like like all the stuff is made up, but the altcoins are complete. The meme coins, I should say, within the altcoins are completely made up, or the shit coins. So I guess this was a joke based on the fact they're shit coins, right? Who knows? SHYT is what they use. Anyway, sometimes you just buy the new highs. If anybody wants me to look at any individual pairs, I'll be happy to do so. While we wait for the software to catch up, I will go ahead and begin. I'll hop into stocks. We could always hop back into cryptos if you guys want to take a look at some of them. All right, just a brief update on the markets. And if there's any stocks you guys want me to look at, feel free to type them in now. And by the way, if you're looking for these shows, if you go to davelandry.com/webinar, you'll be registered for all of them. And I'll try to do a better job of putting out shows or loading shows sooner, or upcoming shows, I should say. Right now, I just tend to do it the day of, 5 minutes before. But if you go to davelandry.com/webinar, you could sign up for all the shows. As I add shows, you'll have access to them. Anyway, let's take a look at the overall market and do a little drilling down. First of all, S&P 500 on a daily basis. Yesterday was a bit of a bummer because we were pushing into this overhead supply like butter, doing pretty good, but then we began to stall out yesterday. Today is kind of a mixed bag. So as usual, follow through will be key. The VIX was kind of interesting, by the way, because the reversion to the mean move, it's like the mean reverted to the price as opposed to price reverting to the mean. In other words, this is the 10 simple. The 10 simple caught up to the VIX as opposed to the market correcting. I suppose it did correct yesterday, so it took a while. So it did both, okay? The moving average caught up more than the market corrected, but we did get the market correction from a VIX that was stretched 10% or more to the downside. It's worth paying attention to the S&P 500 and the VIX for that matter to revert back to the mean. In other words, to have a sell-off in the S&P and then a rally in the VIX. I would not position trade off of this. Years ago, I had short-term systems based on this. The systems are still out there. They would probably be in Dave Landry on Swing Trading, the original ones. And they're worth keeping an eye on, but as I said before, these short-term systems like this and others can print money for a while. Unfortunately, something bad could still happen with short-term trades. So there were some buy signals. This thing printed money. I was looking at it, I was like, well, how come I gave up on this thing? You know, I kept paying attention to the VIX. I never stopped looking at the VIX. But as far as trading the system outright, I stopped doing that many, many years ago. And then I went back and looked at it. I was like, wow, this thing is absolutely printing money. And then all of a sudden, bam, something happened called COVID. And the market originally ignored it, and then it didn't. And that's when you can get creamed in a short-term system. Anyway, so we're actually on the cusp of getting stretched to the upside here. Not quite though. We have to go a little bit further. All right, getting back to the overall market. S&P 500, we just did that. NASDAQ composite, yesterday got whacked too, outside day down. It still was a mountain of overhead resistance. And recently I was asked if overhead resistance still matters. And my answer was a resounding yes, it does. Okay. And if you go back and look at the charts historically, I put out a tweet on this a while back, and then I talked about it in my group. But like 2000, you hit that overhead supply, it rolled right back over. 2007, same sort of action happening there too. We'll just put the P's back up real quick. A little bit more obvious in the P's, okay? Overhead supply was here, overhead supply was here, okay? And even this 2015, 2016 market, this was pretty ugly. This felt like a bear market back here. And we did stall at that overhead supply, and we sold off fairly hard. So you can lose a lot of money anticipating a breakthrough overhead supply. Now, so far, as my client pointed out, we've pushed through it like butter, and a lot of times we just go right through it. So does it matter anymore? Yeah, it matters, okay? You got to be really careful with this time. It's different when it comes to markets because human nature never changes. All right, let's take a look at the NASDAQ composite. Okay, day. Let's get back to the daily on that one. All right, let's get back to, okay, here we go. So sold off fairly hard yesterday, like the P's, outside day down. Again, lots of overhead supply to get through. Russell 2000 sold off hard yesterday. It's trying to claw back today. Russell 2000 stalled at short-term resistance. This has a bit of a witch hat look to it. Yeah, it's improved shorter term. You have bow tie upside, proper order, but you bumped into resistance and you rolled right back over. Still well below the 200-day simple moving average. I kind of use that as a reference once a market begins to tank. I don't really worry about it otherwise, but you can see that 200-day moving average is also below a mountain of overhead supply. And yes, I still think overhead supply is important. It doesn't mean that if I see a setup I like, I won't take it, but I'm less excited about taking setups when there's a lot of overhead supply. Gold and commodities been doing pretty good today, notwithstanding, but so far we're rallying out of a kind of a, albeit choppy pullback. Gold stocks themselves so far rallying out of a, again, albeit choppy pullback. And we have, we're long TFPM there. And what was the other one? KGC. EFA shares have really defied gravity, okay? They took out that prior peak at here. You know, but Dave, the market's supposed to stop the prior peak. Well, it's dangerous to try to anticipate it's going to break out, but sometimes it breaks out. Sometimes it happens. Anyway, it began to accelerate higher, so overbought became super duper overbought. A little correction there yesterday, down a little today, but so far kind of hanging in there. So we'll see what happens with the EFA shares. Now, getting back to the metals, if we take a look at platinum and palladium, they've gone straight up as of late, melted straight up. So we'll see what happens there. Maybe there's some setups that might show up in some of these stocks. There's palladium. It's even crazier than platinum, if you can believe that. Some areas still remain in longer term downtrends, even though they're kind of chopping around a bit. Biotech so far remaining in a longer term downtrend. Major drugs, another area comes to mind, choppy, but also remaining in a downtrend. On the upside, defense stocks have taken off nicely as of late. So to pull back, we could see some setups within defense. And then everything else is kind of a mixed bag. Uranium has been improving as of late. And here's the miners. You can see bow tie, kind of cup and handle, still below the 200, but looks like they're trying to bottom out. Home builders rallied up a little bit, but unfortunately turned back down. That's probably because of the freaking bonds. Now here's a bit of a bummer. You got to be careful when you hope, right? I was hoping bonds would hold these prior lows. They did not, okay? So we're almost down to these lows that we haven't seen in a couple years. You have to go all the way back to 2023. Bonds down, rates up. So let's hope, I know you shouldn't hope, but hopefully that situation will resolve itself and those bonds will bottom out a little bit. I posted a meme earlier today in the group where it was the little figure was reaching for the brand new highs or whatever, and then behind it, holding it back, was the spike in yields. All right, anybody want to talk about any individual stocks? Anything you're looking at, anything you like? I'll be happy to give you my 2 cents. Well, while we're at impasse, obviously I want to thank everybody for attending today. Anything unanswered, Dave Landry. .com. No show next week. Memorial Day week. It's kind of hard for me to get a show together on a holiday week. Got a lot going on next week, so I won't be doing that. But I'll be here if you need to get in touch with me. All right, going once, going twice. Let me give the YouTube people a few seconds. A little slow over there. All right, again, thanks everybody. Everybody have a great Memorial Day weekend. I'll see most of you guys and girls, I'm sure, in Facebook before then. But everybody have a great weekend, and may the trend be with you. Thank you so much. You're welcome. You're welcome. Thank you.